Hello, my traders. Welcome to Leading Forex YouTube channel, free Forex training or tutorials. My name is Kofi, your admin for this channel. In this video, we're going to talk about COT report. Yes, COT report. I'm sure you've ever heard of it, or maybe you know a bit about it. Now, a lot of us have been saying that we want to be trend traders. We want to follow the trend, or we want to follow the market makers or the banks who control the market. Now, the question is, if you knew the position of the banks, if you knew where the banks are going or what the banks are doing, wouldn't that be important and useful to you as a trader to also know where to go? Right? Yes, you're getting the picture. Now, these banks or institutions who are the controller of the price, they always give us their details of their positions or their commitment, where they are going. It's always available. And that is what I want to show to you. And that is the report we call the COT report. The banks or the market makers who control the forex market, their position in the market is always released every week. The data of their position in the forex market or in the commodity market is always available in every week. And that is what I want to take my time to explain it to you, because once you know what the market makers or the banks are doing, you will know where to also go, because where they go is where the price is going. If the banks or the institutions or the market makers are going bullish, trust me, the market is going bullish because they control the price. So how will you know that? This video is going to be long, but I think the importance of this video shouldn't be a worry in terms of length. The length shouldn't be a worry to you at all. All right. Now, let's go straight into this video and look at COT report. Take your time. I will also take my time. And then if there's a need for you to even take your pen and paper to write down some things, this is the time to do that. It involves a lot of calculations. You can even go on the internet to search for other videos on COT report. And then when you finish, come and compare it to what I'm about to give to you now. And you will see the difference. I know what I'm talking about. Yes. So let's go straight into this video. First of all, I want to tell you the genesis of this COT report. Okay. It's very, very important. Now, COT report. Now, the word COT stands for commitment of traders. C stands for commitment. And then the O stands for off. And then the T stands for traders. Commitment of traders simply means the position of traders. And the position of traders we are talking about here is not you and I, the retail traders. It's not you and I who sit by our PC or with our phone to trade. It is not we, the internet traders, our report. No, this is a report of traders who are the banks, the market makers, the institutions, their position in the market, their position on some currencies and commodities. That is what this report is all about. So the commitment of traders, which is not you and I, the report of those traders. And like I said, it is released once every week. And we need that report. It's very, very important. If you want to trade like the way the banks trade, if you want to trade like the way the market makers trade, then take your time and let's continue. So now you know what COT report stands for. COT stands for commitment of traders, and then the report. So commitment of traders report, COT report. How do we get this report? Who provides this report? Let's go straight into detail and see. Now, let me talk about this institution established by the US government. That is the Commodity Futures Trading Commission. This is the first regulatory commission that was established to regulate the activities of commodities, futures, which includes Forex. It was the first institution established in the year 1974. Now, let's read some notes quickly on this one. I want you to understand this institution so that you know their work and know in detail what they do. Now, The Commodity Futures Trading Commission, which is the CFTC, is an independent federal agency, meaning it's a government agency that regulates the derivatives markets, including futures, contracts, options, and swaps in the United States. Its goal includes the promotion of competitive and efficient markets and the protection of investors against manipulation, abusive trade practices, and fraud. The Commodity Futures Trading Commission Act established the CFTC in the year 1974. So in the year 1974, this institution known as the Commodity Futures Trading Commission by the US government was born. And their activity, their main work is to make sure that they promote competitiveness and efficiency or efficient markets. Apart from the promotion of competitive and efficient markets, they are also there to protect investors. So when we talk about investors, we are talking about these big institutions, the banks, and then the hedge funds, the mutual funds, and other big companies who are holding on to currencies for profit, who are trading currencies for profit, or who are trading commodities for profit. This institution is to protect them against manipulations and then abusive trade practices and then fraud. The Commodity Futures Trading Commission Act, which was established or came up and then gave birth to this commission, is something we must not joke with. So there was a commission, or the Traders Commission Act, and then at the end of this act, after this act was, it was a bill. Initially, it was a bill which was passed into an act by the US government. And then when the bill was passed into law, they had to establish this CFTC as a commission to regulate the activities of the forex market. Is this clear? Good. Now, since this institution is supposed to regulate the activities of the forex market and also to protect investors against manipulation, abusive trade practice, and fraud, it has necessitated, yes, it has necessitated the need, or that there has been a need that this Commodity Futures Trading Commission to demand the position of traders in the forex market every week. Or let me put it this way. Since this institution is there to protect investors against manipulation and abusive trade practices and fraud, it became necessary that this commission would demand for a report about the position of these banks or institutions in the forex market, so that they can use that information as a guide to make sure that if the trade goes otherwise, they can hold whoever is liable. Do you get the analogy here? So these banks who controls the price are supposed to feed this commission their positions, so that this commission will be aware of the banks, their positions, where they are going. It is when they know where they are going, that is what will help them, or will be able to guide them to be able to know when someone is reporting a fraud case or some manipulation. They will use that data to be able to judge whether indeed there was a manipulation or fraud somewhere. Please, do you get it? I don't know if my English is that accurate in terms of this explanation. So the commission was established to make sure that they will guide we the investors, and not just we the small investors, the banks, the institutions, the market makers, those who control the price. So they get their data, and then they keep this data, and they also release this data to the public, so that in case any of these banks are cheating or manipulating the market, they will be able to know. In 2019, it was as a result of this data collection that this Community or Commodity Futures Trading Commission filed for Barclays to pay an amount of money to some investors because they felt Barclays Bank, who is one of the controller of the price of the Forex market. These banks, there are about 8 of them, including some institutions. They control the price of the market. When they move somewhere, the price is going there. So in 2019, this commission actually gave a penalty for Barclays Bank to pay for cheating some or for manipulating some currencies in favor of them and then against the investors. And the amount was very huge. I think later on, maybe if you need that information, I can go and pull it out for you to know how much this commission slapped on Barclays Bank to pay to some investors because they saw or they felt there were some kind of manipulations in the dealings of Barclays as a bank. Now Barclays is no more. We have Absa Bank now. So the then Barclays, which is now Absa, is what I'm talking about. So they do a very good work. They do a gentle job and they make things decent for we the investors, especially the bigger ones, not we the small ones. Anyway, we the smaller ones are also inclusive, okay? So this is the commission, and this commission that always requests for this COT report. The COT, like I said, commitment of traders. These banks, their position in the Forex market, they request for that information, and then they release that information to the public, all right? Now, this commission has its official website. We will be going there soon. And then I will show you where you can get the report. And by just seeing the report doesn't say anything. When you see the report, it won't make sense until you are able to do the calculations and do the mathematics. It is then that this report will become sensible or will become important. So let's continue. Now, before we come to this website, so it means that you can get this COT report from the Commission's official website. Okay, we'll be going there soon. Now, it is only this commission that receives this data from all the institutions across the world. They receive this information. They are based in the US. So once they receive this information, they publish it. And when they publish it, other websites also pick it up. And some of the websites who also pick this information up is this. This is one of them. That is the tradingstar.com. So tradingstar.com has a lot of adverts on their site. That is why I took a screenshot, because if I go to the site and the advert is displaying, YouTube may ban this video from being public on YouTube. So that is why I had to take a screenshot. So tradingstar.com is one of the sites that pick or they copy the information that the commission releases, and then they also modify it or make it look simple on their website. It's a very interesting website. I'll be showing you more features on this tradingstar.com, and you will get to know how important they are also. Okay, they have simplified some things which also make them the site very, very easy to navigate. Okay, so we'll come to the tradingstar.com. So you can either go to the tradingstar.com to get your COT report. So when you go to the tradingstar.com, don't forget, this one is not the official release, the releaser of the information. Let me put it that way. They don't release the info. It is the Commodity Futures Trading Commission that release the info. And then they copy it. And then they also put it on their site by making it simple or very easy to navigate. Is that okay? So this will become a secondary website in case you don't want to deal with the official website, okay, which is the Commodity Futures Trading Commission. Now, let me take you, before we come back to this tradingstar.com, I want us to go to the official website of this US government agency that provides us COT report. Let's go straight to that place. So I'm taking you to the official website. So this is the official website of the Commodity Futures Trading Commission. This is their official website. And it is on this website that they always release the COT report. Now, let me say this. Listen carefully. Or better still, let me pause this and make you understand this. Now, these banks, they submit, or not only the banks, the institutions and the banks and all other bigger companies, they always submit their report to this commission on every Tuesday of the week. Listen carefully. This is where the catch is. They submit the report to this commission on every Tuesday of the week. So it comes once in a week. So they submit the report to the commission once every week, which is on every Tuesday. And when this commission grabs the info on Tuesday, they put it all up, they gather it, and then they arrange it nicely, and then they release the information to the public on every Friday. So the report is submitted to them on Tuesday by the banks or the institutions, and then this commission does all the work they're supposed to do around the info or the data, and then they release it to you and I, or to the whole world, on every Friday. So the data is released on Fridays, 5 p.m. US time. If we are going on US time, New York time, let me be specific. The New York time, it's 5 p.m., which is in Ghana here, 9 p.m. I am in Ghana, Africa, Ghana. So in Ghana here, it's 9 p.m. That is when, on Fridays, 9 p.m., that is when this Traders Commission releases the COT report to the whole world. So they get the data on Tuesday, and then they work on it and release it on Fridays. Now, a lot of people have issues with this, that, okay, they wish that once the report is submitted to the company or the institution, which is the Traders Commission, on Tuesday, they should release the data on Tuesday. Because when they release the data on Friday, it's no more that current. I don't know if you get it. Some people are of the view, yes, that, okay, once the commission is receiving the information on Tuesday, they should release the information on Tuesday, not on Friday. Because once you release it on Friday, it has delayed. Between Tuesday to Friday, traders are kind of not knowing what is happening. So if they can release the info on Tuesday when they receive it, when all the institutions, the banks, give them the data, they should quickly work on it and also release it to the public on Tuesday. But I want to say this, that it is of no worry. It's of no need. It is not important. The dates on which they release it has no problem. Okay, there's no problem with it. They get it on Tuesday and they release it on Friday. There's no problem. Although they delay in the release to us, but it doesn't have any problem. And I'll explain why it has no problem as we go on. Is that okay? So there's no problem. The report is given to the commission on Tuesday. The commission releases the report on Fridays. I have given you the time. In the New York time, that's 5 p.m. In Ghana time, it's going to be 9 p.m. on Friday. All right, good. Now let's go back to the commission's website, and then we continue. Now, this is the official website of the commission, which is cftc.gov. Okay, cftc.gov.com. Once you go there, you should be able to get this website. Okay, CFTC, that is the Commodity Futures Trading Commission .gov, which is government.com. You will get this website, this official website. It has been like this from time immemorial. The website looks the same. Okay. Now, in case you have been manipulated by any institution and you want to file a report, you will come to forms and submissions. Okay. You come to forms and submissions. This is where you come and then you submit your complaint, okay, to them, and then they will take it up, and then they will begin to look for it and then work on it for you. Okay. All right, so that is that. But we are not interested in this because I have talked about this in one of my videos in terms of the regulatory bodies. If you have watched my video on Forex regulators, those who regulate the Forex market, if you have watched my video on that, you will hear me talk about this Commodity Futures Trading Commission as a regulatory body. Okay, so I'm not going to talk about how to submit your report to them, to file a complaint and stuff. I'm not going to talk about that. Now, what I'm going to talk about is the COT report that they release to us every Friday. Now, when you come to the website like this, you scroll and come down. You see that here they have a lot of data, but when you scroll and you go down, you come to down to this place, which is current legacy report. Okay, current legacy report. Under current legacy report, you will see Chicago Mercantile Exchange. Chicago Mercantile Exchange. Should I circle there for you to see? Here, this one here. Chicago Mercantile Exchange. So you first come to current legacy report. Under that, you come to Chicago Mercantile Exchange. Now, when you come there, there are two things you will see. We have the long format. Sorry, it's here. Chicago Mercantile Exchange is this one. You see they have long format and then short format. Long format and short format. It is the same report, but this one is in its long format, which looks a bit confusing. But we want the short and simplified version, which is this one, the short format. That is what we are looking for. So you will click on that short format. Okay. So when you click on short format, it should take you straight to the COT report. This is the report. So this is the COT report. Now you see it. This is the whole report. And you will see the date on each of them. And the report is mixed. USD Malaysian crude palm oil. Okay, the date is 18th of October 2022. So this is the latest report. You see butter. So this is the report on butter. So institutions, the banks who are trading commodities, butter. When you continue, you see milk. Milk is here. You see non-fat dry milk. All of this data are here. These are all commodities. CME milk. They also have lean hogs. A lot of products and stuff. They have live cattle, those who are trading in those commodities. They have random length lumber. They have feeder cattle, a lot of them. Our interest is on they have cheese also here. And then the first currency, so you see that it's mixed up. We have Canadian dollar here. So this is the Canadian dollar. That is the first currency you will see here. The Canadian dollar, which is here. So this is the report on Canadian dollar. Okay, now let me also say this thing here. This is also another point you're supposed to take note of. The report, you know, these are features. There's difference between features and currencies. Features are individual currencies. When you are trading individual currencies, that is feature trading. But if you are trading pairs, currency pairs, maybe USD and JPY, or maybe Euro USD, at that point, you are trading them in pairs. That is the currency market. Currency market is traded in pairs, but the feature market is in single currencies. So the report is on only one single currency. The banks and institutions who are trading Canadian dollar. This is the information they provide. But it will make sense very soon as we continue. So this is on CAD. They also give us information on Swiss franc, also here. So the next one is Swiss franc, which is also here. They give us Mexican peso. Information on that is also here. A lot, almost all the currencies are here. Both the exotic and then okay, so the British pound is also here, which is GBP. And then we have the Japanese yen also here. We have the euro here. The euro is next. Euro is here. So you see that? Good. So we have the euro also here. The euro is also here. And then we have the Brazilian real also here. A lot. lots of almost all the currencies are here, including other commodities, crude oil, everything is here. We have NZ dollar, which is the New Zealand dollar, is also here. They have the South African rand is also here. They have the euro dollar. That one is not part of our calculations. They have Bitcoin also here. So Bitcoin, they have it here. It's here. They have the micro Bitcoin also here. They have a lot, almost all, but they also have what do you call it? Let me see if I'll get the rest of, I think with the currencies, which one? They have S&P 500 also here. A lot, almost all the commodities and features, they are all here. They are all here. Almost all of them are here, but just that they are mixed up. Okay, they are mixed up. So the report is here. The report is here. You can see it all. They have NASDAQ also here. NASDAQ is here. All the report is here. All right. Nikkei, they have the Nikkei stock also here. I wouldn't waste much of your time. So the whole report is here. So like I said, the commission releases this report on Fridays, although they receive it on Tuesdays, and then they release it on Fridays. Is that okay? Good. So this is the commission's website, where to get it. Okay. So like I gave you, when you go to the official website, you come to currency legacy report or current legacy report. Under that is the second menu, Chicago Mercantile Exchange. Then you click on the short format to get the report. Is that okay? Fine. Now let's go straight. This is becoming interesting, right? So you see that it is not just opening on the website. You have to navigate through some places before you can get this report. Okay. People always ask that, why is the report hidden? It is not hidden. You know, the site has a lot of info, so they had to put somewhere. So that is how it is. Okay. But if you want it simplified, that is where we will go to the notes, and then you can come to the tradingstar.com. The tradingstar.com, I told you, it has a lot of advert on it. And for the sake of this video on YouTube, I had to get you a screenshot, because if I record the video with the advert, this video is going to be restricted. So that is why I gave you a screenshot. So when you go to the tradingstar.com, they have grouped the commodities and the currencies. So this area is for currencies. So the first menu here is for currencies. So Australian dollar, British pounds, Canadian dollar, euro, Japanese yen, Swiss franc, US dollar, Mexican peso, New Zealand dollar, and then Bitcoin. So it's grouped. And then they have the stock indexes. So if you want the stock, S&P 500, NASDAQ, Dow Jones Industry, the Russell, the E-mini S&P 400, all of them, it's all grouped over here as two. And then they have grains. Those who are interested in these commodities, grains are also grouped here. So we have corn, soybeans oil, soybeans meal, wheat. They have wheat again, wheat, and then oats, and then raw rice. So all this is also here. If you want to be trading them, their report is here. And then they have livestock, live cattle, feeder cattle, and then lean hogs. The lean hogs, all their reports is also here. And then the metals, they have gold, they have silver, they have copper. So this is how the traderstar.com has grouped it. So when you come to the traderstar.com, yours is to come to, if you need Australian dollar, you click on the COT legacy. Okay. All the reports here, if you need the report, you click on COT legacy, COT legacy, COT legacy, COT legacy, and then the report will pop up or it will show. All right. Now, like I just said, apart from the report here, this website, which is the tradingstar.com, has other features that are also very, very important. Let's go there. If I go to the next slide, apart from the report, this tradingstar.com has also compared the prices. Now, when you go to the report has 3 or 4 main things. We'll be talking about it. They have the non-commercial report, they have the commercial report, and then they have the non-report also there. And then open interest, then they have spread. All of this, you see it on the report. I just went to the report, but I just don't want to waste my time there. So if you go to the report, you see all those things over there. Now, apart from this website, which is the Trading Star, has grouped this report together. And they have given you the net positions of the commercial traders, the non-commercial traders, and then the non-report traders. I'll be explaining all this later. That is in detail. That is where things are going to happen at the later part of this video. So let's continue. Now, let me explain it here. Now, the non-commercial traders are the banks, the hedge funds, the mutual funds, or the insurance companies, and then also some institutions who are mainly speculators. It means they depend on the movement of the currency, the direction of the currency. They speculate the market to make their profit. So they are buying and holding currencies to make profits. They are called the non-commercial traders, which we call the market makers. They control the price of the market. Okay. Now, the commercial, so that is the non-commercial. So the non-commercial are actually the market makers, those who control the price of the market. The banks, and then the institutions, the hedge funds and other institutions, the mutual funds and the rest. They are the non-commercial traders who are actually the movers of the price. So they have put the non-commercial in blue color. So these lines you are seeing here, the one in blue, is it really blue? I don't know. I'm not good at colors. So this one here is for the non-commercial traders or the market makers. Now this screenshot is on USD. That's US dollar. Okay, take your time. This is where the interesting part is. So this is for the non-commercial traders who are the market makers. Now, the commercial traders is in ash, which is the down one here. Now, the commercial traders are also traders that actually are not looking for profit in terms of speculating, but they want to hedge against any unforeseen circumstances. So what they do is that, for instance, let me give you a typical example. For instance, Coca-Cola. Coca-Cola is a commercial company and it's worldwide, Coca-Cola. So Coca-Cola can choose to hedge because, you know, Coca-Cola will have to buy raw materials, pay for expenditure, pay salaries and other things. So they often hold on to certain currencies, depending on where their companies are established. And we know Coca-Cola is a whole wide world thing. So they will buy and hold on to certain currencies so that when inflation is taking place, they will not be affected. So all monies in a year that's supposed to take care of maybe a company, Coca-Cola company in Ghana, the company will shift money to Ghana earlier so that the year, once the year begins, if the inflation rises or does what, it is not their headache because they are holding on to some currencies or they have already bought currencies and sent it down to Ghana to take care of their expenditure, their payments of salaries and other things. And they are holding on to one currency. The money is converted into one currency and it's lying down in Ghana. So you see how the commercial companies, they hedge? Good. So the commercial companies are always going the opposite direction of the market makers or the banks. So you will see that the commercial companies, which are, for example, Coca-Cola, Apple, and the big companies, Amazon and the rest, they are hedging against the rise and fall of currencies so that their company is not affected. So they are always going the opposite direction of the market makers. So you will see that here the ash color has been down completely on USD, whilst the market makers are up with USD. Okay. Now, when they are down like this, whatever is happening up here, they are not affected. The dollar is rising, it is in their favor. Get that? Maybe I will explain in detail this scenario, but for now, let me just keep it simple. So the commercial bankers, the commercial institutions who are the Coca-Cola, the Apple, and the other Amazon and other institutions, okay, who are commercial, the Facebook and the rest. These are commercial institutions. So they go the opposite in terms of hedging. And then the market makers, the banks who are speculating to make profits. When the currency is rising, they are making profits along. or when the currency is falling, they are making profit along. They are in the blue color, or is it green? Is it green or blue? This is blue, right? Good. Or green, I don't know. So this is the non-commercial, this is the commercial. And then the non-report is the red one in the middle, which is often not important to us. This report is not important. The one in red is not important. Now, take note of this. Since July 2021, look at this. Since July 2021, the non-commercial traders, who are the institutions or the market makers, they went long on USD. They were holding buy on USD, meaning that USD was going to be strong. So since July 2021, USD came into the bullish zone. And it's been bullish since July 2021 up to date, which is today, 18th. I am using the COT report date, which is 18th. USD has been bullish. So assuming we will be going to the MT4 for you to see what I'm talking about. So assuming you saw this here, that USD is in a bullish zone and that it's going to ride for this long. So assuming you entered your trade in July, look at it. Now, I also told you that I'm going to explain to you why when the report is submitted on Tuesday and then the commission gives it to us on Friday, it's not really that argument of they should give us a quick, I don't know how to put it, the argument that they should give us quick current info is not a problem. The reason I said earlier that it's not an issue, whether they give it to us on Tuesday or Wednesday or Thursday or Friday is not an issue, is because, now take note, this is another point. The non-commercial traders, they don't enter their trade for short period like we, the retail traders, do. Take note. These non-commercial traders, who are the banks or the market makers, they hold their positions for a very long time. They can hold their position for like a month, for like 2 months, for like 3 months, for like 6 months, a year, 2 years, even 3 years, they can be on one position. Yes, they can go that long. So if this is the mindset of these commercial traders, then we need not to be worried if the report is submitted to them on Tuesday, which is the commission on Tuesday, and the commission releases it to us on Friday. That is the 3 days gap. There's no any problem, because the market makers are not just going into the market for just some 15 minutes, 30 minutes, and then they go out like you and I do. I don't know if you are getting me. They are long-term traders. That's how I want to put it. The market makers, the banks, and they are long-term traders. If not, look at USD. In July 2021, they went buy, and they remained buy throughout, up to from July 2021 to currently October 2022. They are still long on USD. So they are not short-term traders. They are not day traders like you and I, who are looking for some 10, 20 pips, 30 pips, 50 pips, and we are out of the market. No, they are not like that. They are long-term traders. So when you see them increasing their positions on a currency, they are going to stay there for long. They are not just going to enter and come back the next day or come out of the market the next day or the next 2 days. No. That is why when you know the trend of the market, so if you knew that this is the trend of USD was going to be bullish right from July 2021 up to October 2022. What would you have done? You would have been looking for a buy on USD, isn't it? Good. Now, let me show you another currency. This is USD. Let me show you another currency. This is Euro, but I'll even come to Euro. Let me show you one. Or this is what? I think this is rather Euro. Okay, this is JPY. Let me show you this one before we go to Euro. This is JPY. Look at JPY. JPY, where are the market makers or the institutions? Here they are. And where are they? They have been on sale throughout. Which year? 2021 March. In 2021 March, they went on sale. Now, look at the 0 point here. The 0 here is a 0 line. Okay? There is a 0 here, which is a 0 line. So the zero line is telling you that when the non-commercial crosses down, it means they are bearish. When they crosses up, it means they are bullish. The non-commercial, who are the market makers. And look at JPY. So JPY, since March 2021, they went bearish. And the market makers remain bearish from March 2021 up to October 18, 2022, today, as I'm recording this video. So they remain bearish throughout. So now, this is JPY here, okay? Bearish right from March, okay? And then this one here is USD, okay? This one here is USD bullish. So I want us to go to the MT4 and look at USD JPY, okay? USD JPY, USD has been bullish right from July, while JPY has been bearish right from March 2021 or 2021. Now, let me take you to the MT4 for you to see something. MT4, where are you? Let's look at something on the MT4 quickly. This is the MT4. Now, on the MT4, let me bring USD JPY. USD JPY. This is 1 hour time frame. Let me go on the weekly time frame so that you see something. USD JPY on the weekly time frame. Look at it. USD JPY has been bullish. The reason is because the banks were bullish on USD and bearish on JPY. So if you have USD JPY as your currency, it means USD is going to be strong, JPY is weak, because the market makers are bearish on JPY and they are bullish on USD. So what do you expect? USD, which is on bullish side, means strong, and JPY, which is on bearish side, means weak. So USD JPY is supposed to be bullish. And look at it. This is weekly. Each candle represents a week. It's been bullish throughout. Throughout. Look at it. They've been bullish throughout from 2021 up to 2022, October, as we are recording this video, October 18th. They've been bullish weekly. Now, that doesn't mean that they didn't come bearish. Here in 3 weeks, they came bearish. Again, in 3 or 4 weeks, they came bearish again here. And even last week, they came bearish. And somewhere here, they went bearish. So, as a trader, this is weekly time frame. The banks or the institutions, they know that when the trade is going bearish, it is not their headache because they know the trend of the market. So in a whole month, when the trade was going bearish here, they didn't care because they are long-term traders. They knew where the trend is and they know where the trend is going. Here in 2-3 weeks, the market came bearish here, which was just a pullback. So they didn't panic because this is weekly time frame. They didn't panic because they knew the direction. Here, the market consolidated, giving you bearish and bullish, bearish and bullish. And they didn't care because they knew the trend of the market. All this time, look at it. Here, this is April 4th, 2021, in April. So July, April, May, this is June, July. So July here. So it was in July that USD crossed and went bullish. So from July here up to the top here. So July 2021 up to October 2022, it's been bullish throughout. So if you are afraid, when you see a sell, you'll be rushing to take a sell because you think the trend is a sell, because you are seeing some 3 weeks sell. You are seeing some 1 month sell. Each weekly, 4 weeks in a month, 4 weeks will give us a month. So 4 weeks, they went bearish and you are panicking. You think the trend has changed to bearish. No, the market makers knew what they were doing. So the report, when it comes and even delays for 3 days, it is of no worry because the market makers don't just enter into the market and go run out of the market like you and I do. They stay in the market for long. When they ride for long. They don't ride for 5 minutes, 10 minutes, 15 minutes, 20, 30 minutes like you and I do. But That is also how we also do. So how can we trade with them? If we want to trade with these people, how can we trade with them? So I will be revealing that at the end of the video. Let's continue. I told you this video is going to be long, but don't worry. Now let's go back to the information here. So you see how clear it is. So you will get this on tradingstar.com. You get this on tradingstar.com. It gives you this detail. All right. Now, when I continue, this is euro. Euro was bullish somewhere 2021, somewhere here. This is where 2021 began. Euro was on the bullish side, but started reducing from bullish, coming bearish. Did you see that? And came bearish to a point. But currently, as we speak, as at September 2022, Euro has moved back to bullish. Can you see it? So currently, Euro is still in a bullish zone. Euro is in a bullish zone at the moment. Yes. So if you are looking to make any trade on Euro pairs, you should be looking at bullish for Euro, which is strong Euro. Thank God you are getting the catch here. So Euro has been, since 2021, has been slowly coming down, coming bearish up to this level. And like we saw, USD was going bullish, which is here. USD is going bullish. USD going, oh, sorry, not here yet. Let me go back. Oh my goodness. Okay, now let me reshare again. Please let me reshare this again. It's very important. Okay, so back to the report quickly. Let me just go back to this. This is USD. So USD has been going bullish, as you can see here, bullish. And then Euro here has been coming bearish. And so if you are going to trade Euro USD from 2021, you should be looking for what? Sell on Euro USD. Because whilst Euro was falling down, becoming weak, USD was becoming what? Strong. USD was becoming strong. So go to the MT4. Let's go to the MT4 so that you look at Euro USD. Euro USD. This is Euro USD. It's been bearish. Look at how long they've been riding. Huh? Look at the market makers, the banks. Look at how they've been riding. Look at it. Can you see this, right? So they don't just ride for 2 days, 3 days. They don't ride for 1 hour, 2 hours, 4 hours. They ride for long. So in 2 years, they collect their total investment, and then they pick the profit and then the capital back. So that is how come the insurance companies, listen carefully, that is how come the insurance companies will tell you that they want you to be contributing for maybe a funeral policy or maybe an educational policy or a life policy to build a house or something, do the contribution for 2 years, 3 years, and then they will give you this chunk of money as bonus or benefit. You know what they do? They are gathering your money bit by bit. So if they have 1 million people and every month they are all giving their money small, they put it on these commodities. They put it on this currencies, and then they ride, because they have given you a period of 3 years for your insurance to mature. They have given you a period of 10 years for your insurance to mature. They have given you a period of 5 years for your insurance to mature. So if they put this for 1 year, 2 years, look at Euro, just look at Euro USD sell for 2 years, 2021, 2022 alone. Look at the profit they would have made on the money. And then all this profit, they just take maybe 1% of it and then they add it to your capital and give it to you. The rest of the money goes to them as profit. The same with the banks. They will encourage you to come and deposit, open a savings account so that you can keep your money there safe. A savings account, be saving small towards your future. So you put the money there, they pick it up, they gather the money small, they put it on these features or these commodities, these currencies, and they ride for 1 or 2 years or 3 years. They collect the profit. They will even ask you come and invest. They have very juicy packages. Invest for 1 year, 2 years, and this is what you make as profit. And the painful aspect of it is that what they will even give it to you, it's not even up to maybe 0.5% of the total profit they have made. It's not even up to 1%. The profit alone that they will make, what they will give to you out of that profit is not even 1% of the profit they've made. Something very little, very small. Then they give that little money on your investment for you, and you are happy. They have made a chunk of the money, and they are also happy. They are not cheating you. It's your decision to go and give them the money for them to work with it and give you commission. So why the complaint? No complaint here. So this is what these institutions, the banks, the mutual funds, the hedge funds, who are non-commercial, who speculate the currency market to make profit. This is how they get their investment packages, and they make profit and bring you your money. It's sad, right? Yes, it's information that you will get here. I'm telling you what is happening in the real world over here on this channel. I am not worried that this channel is not growing the way I want it to grow. I know one day people will find the right information. For now, the right information is hard to get because people are not seeing this channel. But trust me, people will see this channel soon. And they will know what this channel is worth. And they will know, you will also know what is the worth of this channel. You haven't subscribed to this channel for nothing. Trust me. I have only reserved the better part of the cake to the end. So just take your time, be on this channel, subscribe, and let's continue. Now, the question is, how do you trade? By looking at this COT report, because this COT report, these banks and institutions who are the market makers who actually predict the direction of the price, they are not short-term traders like you and I. They trade for a long time. So how can we follow them and make profit? How can you also do the calculations to make the profit? That is where I'm taking you to right now. Are you ready? Let's go. Now, subscribe to this channel, hit the notification bell, tell people about this channel, okay? Even if for nothing, the education alone, even if you don't make profit from the forex market by watching this channel, the education alone that you are receiving on this channel alone should motivate you to subscribe. Yes, it should motivate you to give a like to this video. It should motivate you to even leave a comment on this video, okay? Now let's go to how you and I can also make profit by following these banks or these market makers, because they control the price, and the Commodity Futures Trading Commission receives this data from them, their positions, okay, their stance, where they are going. They give this report to the commission every Tuesday, and the commission brings it to us every Friday. How can we follow them and make profit? Following them means you are following the trend or trading the bank's way or the market maker's way. Now you will understand why a lot of us lose money in the forex market, because we ride on short trends. And then once we see on the 15-minute, the market is going by, we all want to rush and go by. When it's going sell, for instance, you go on USD JPY, you see that it's going sell and you are in haste to enter sell. You enter a sell, you are in the wrong direction. But you are seeing the sell so huge on the 15 minutes and you think that you are in the right direction. And so you want to leave your trade for more profit. And before you realize, the market maker says, okay, it's okay. We've been going sell for some time now. You know the trend. The trend is a buy. Let's go back to our buy trend. And then they move back. And then you begin to shake. And then your account is blowing. It's blowing. Let's pray it doesn't happen again. Let's see how we can do this the better way. Now, this will involve a lot of calculations. Okay? This is how I analyze the COT report every week. And this calculation, this is not just the whole calculation. If you look at the down part of the spreadsheet here, you will see that I have for each currency here. You see it here. I do the individual calculations here. And then at the end of the day, I bring the details of it here, as you are seeing it here. I may not be able to show you this individual currencies thing here, the calculations individually here, because truth be told, it is not an easy job to do. It's a very difficult job to do. The task is not an easy one. In doing these calculations, it's not easy. That is why it is not easy to find someone doing these calculations for you on the internet. So if you want to learn I am currently working on a website so that I'll be releasing this calculation, this simplified way of the trend to you so that you can use it to trade. I'm currently working on the website, but so that I can be feeding you with that information. But in case you want to learn this personally, if you want to learn how to do these calculations and then know how to get the percentages and then the positions and then the stuff that I've gotten here, the change that is here, and then the percentage of change and all these percentages and stuff, you may have to contact me and pay a fee of $50. Yes, it is a difficult work, but I have made it so simple that I can teach you. Within a week or two, I should be done with this. If you are fast, within a week, I should finish teaching you this. $50 if you want to learn this. Yeah, I'll be ready to teach you for $50. Remember, it is not free. Yes, because the hard work I put in this to get this info wasn't an easy one. And I've been using this to trade. So if you want it, I can teach you, tell you how to individually analyze the market and come to this final data over here, which I'm about to show it to you. Like I said, it will take you or cost you $50 to get it. But if you don't mind, you can be using the TraderStar or the traderstar.com, their information to trade. Okay. But how different will that be? Because that information there is for long term. But my information here is following the long-term traders and making profit along with them in short trades. Okay, in short what? Trades. And I'm going to demonstrate that to you right now. Now, this is my analysis. Now, this is for the report was released on the 11th of October, and then the commission released it on the 15th. So that is why the 15th, the second date is in green. That was the date we actually got it. We, the traders, got it. That was last week. This was last week, okay? This report here was last week. And this one is this week. Today's date is 22nd. So today, 22nd, this is for this week. So I got this information on 21st, which was on Friday. And today, Saturday, 22nd, I am doing this video because I have finished with the report for the week. Yes, all this is for the week. Now, let's see how we use this report I have given here, or the calculations I have done here. Let's see how we use it. Now, all positions that are in negative, the non-commercial traders, like I said, they are the market makers. Okay, the hedge funds, the banks, and other institutions, the market makers, those who actually predict the direction of the market, they are here. And then the commercial traders, the corporate hedging institutions, which are like the Coca-Cola, the Apple, the Amazon, and the rest, they are also here. And like I said, these people always go opposite of these people. I've said that already. So our concentration is on these people here, the ones who move the trend, because they are speculators and we are also speculators. We, the retail traders, we are also speculators. We speculate to make profits by following the trend. Okay, so we want to follow these people here. We want to follow these people here. That is our interest. So once you are able to go through the individual calculations like I did, this will be the position of traders on AUD, negative 31,271. Now, it is in negative and it is in red. That should tell you that the trend for AUD is a sell trend. All the currencies in red with negatives are sell trends. Sell trends. The ones in green are bullish trends. So Euro, for instance, is currently bullish. JPY is still bearish. Chef is bearish. USD is still in bullish trend. NZD is in bearish trend. So the bearish currencies are more. It's only two. These are major currencies, the 8 major currencies that I have focused on. So it's only Euro and USD that are currently bullish. But that means that if you want to trade, you can pair the bullish ones with the bearish ones. You get a catch? You can pair the bullish ones with the bearish ones. So you can pair Euro AUD. And what will be the signal? It will be a buy because Euro is strong, AUD is weak. So Euro AUD should be a buy. GBP, Euro GBP should be a buy. Euro CAD should be buy. Euro JPY should be buy. Euro chef should be buy, in that order. Now, since USD is bullish and Euro is also bullish, I would suggest that you leave these two. But even if you check it well, you realize that USD is bullish than Euro. USD is bullish than Euro. But to be on the safer side, since they are all bullish now, you let the two of them go. And at the moment, there's going to be a reversal of trend on Euro USD because currently USD has hit its peak. So I use this other area, the non-commercial people, the commercial people, I use them for trend reversal. Yes, I use them for trend reversal. Now, if you look at last week, USD is only 4% of traders that are bullish. Okay, and 96% are bearish. Like I told you, they trade opposite of the hedge funds, which is the commercial people. They trade opposite of what? The non-commercial. So since these people, 96% are in short, it means the opposite is a buy. So it means they are trading the opposite of the buyers. So it means the trend is a buy trend. Now, but you can see that it has reached its peak. Out of 100%, only 4% are bullish for the hedge funds, commercial companies. And then the rest 96% are what? Bearish, which means the bullish trend has hit a peak. So if the bullish trend has hit a peak on USD, we should begin to start seeing a reversal of a trend. It means USD should begin to come down from now onwards. From now onwards. So those who are holding on to the dollar, they should begin to sell off their dollars because the dollar has hit a peak in terms of its strength. It has hit the peak of its strength. So once that's hit at the peak of its strength, we should begin to see the reduction of the short and then an increase in the long. And you see the reflection of that in this week. Look at this week. Last week, the sales were 96, but this week the sales have reduced to 95. It means what I said is true. We are beginning to see the drop in the strength of the USD because it has hit its peak. And then there's buyers who were only 4% has also increased by 5%. So yes, it is true that USD has hit its peak in terms of strength. So we should begin to see a reversal. USD should begin to start weakening bit by bit, bit by bit. It is only here I'll do the calculations and give you this information. Now, like I said, if you want to learn this, it will just take you some $50. And then within a week, I should finish it. This will not take anything long. Yes. Now, how do you trade? We haven't gotten there yet. How do you trade? Now you know the trend. Okay. You know the trend of Euro to be what? Bullish. And you know the trend of USD to also be what? Bullish. This is where you actually find out whether this area here is where you will find out whether you should ride with the trend or hold on because there's a little reversal coming. Although the trend is bullish, but is there a reversal coming or not? Let's see. On AUD, AUD has been bearish, okay? But the number of traders who were bearish on on AUD reduced by 7,395. Yes, although AUD is on bearish, but the number of traders that were on bearish reduced by 7,395, which is a change of 10%. 10% of bearish traders have left the market. So what do you think? It means at that moment, AUD is going to gain some little strength or relief, a little relief, because the number of people that were on the currency, which is AUD, has reduced a bit by 7,395. So it means although AUD is bearish, but there's a little relief on the AUD currency. So we should see some reversal. Fine. GBP is also bearish, but the number of traders who are bearish increased I just want to use this alone to give you the signal. Listen carefully. GBP is also bearish, but the number of traders who are bearish on GBP increased to 24,000 by 24,681 increments, which is a percentage of 24%. So it means GBP is bearish and more people have gone bearish on it again. So it means GBP is going to become weaker, isn't it? So let me put the blue here. Do you get the calculation? GBP is bearish because this is the trend. The trend here shows that it is bearish, but more people have gone bearish on GBP. So it means GBP is going to suffer more. It's going to be weak the more. And then AUD is also weak. But the number of traders who are all on AUD have reduced by a margin of 7,395. So it means AUD is going to have a bit of relief. So if you are trading GBP AUD, what do you think will be the signal for this week? Last week, I'm using last week because this is last week. This is this week. We are still working on last week first. So it means per this calculation, it means AUD is going to take GBP down because GBP is more weaker. And then AUD is a bit relieved in terms of weakness. It has given a little bit of strength. So if in the coming week you will be trading GBP AUD, you should be looking for sell opportunities on GBP AUD. Does this make sense? I'm sure it does, right? If you don't understand, you can get me on the one-on-one mentorship by paying just the $50. That one is for this alone. The $50 is just for this alone, the COT report. So it means GBP AUD is going to go a bit of sell, although they are all weak, but GBP has become more weaker. More traders have gone sell on GBP, and then traders have left AUD in terms of its weakness. So AUD is going to be a bit relief. GBP is going to suffer more. So GBP has become more weaker. AUD has gained a bit of relief. So let's go to the MT4 and check. We are going straight to the MT4 with that, just this alone. GBP AUD for last week. GBP AUD. Look at it. What happened? GBP AUD came sell. Isn't it? This was the week. This is a weekly candle. This is for the whole week of last week. So you got this information on Friday, and then you did the analysis on maybe Saturday or Sunday. So you knew the direction the market was going to go. This is for the week. On GBP AUD, it came sell. This is weekly. If I come on daily time frame, look at it. This is daily time frame. For the whole week, 1, 2, 3, 4, 5. For the whole week, GBP AUD was on sell. Isn't it? This is not magic. It is something you need to learn and know. If you go on the 4 hour, you can even see it better and clear. This is on the 4 hour, so you can see it. Came sell, right? As you can see, this is daily. If I go on the 1 hour, you can see it. This is on the 1 hour. So the whole week, GBP AUD was on sell. As easy as that. So if you are looking for opportunities, you should be looking for sell opportunities. Although they are all weak, but AUD is gaining an upper hand over GBP because of the calculations that came. Because of the COT report. Because of the COT report from last week. Now, I may not be able to do it individually for the sake of time, and I don't want this video to be so much long. But let me come here. This is this week. So this is the coming week. This is going to be for the coming week. Now, if you look at the coming week, look at AUD. AUD is the first one. Today is Saturday. So by Monday, we are going to begin the week, or Sunday rather, Sunday night in Ghana here, the market is going to open. Now look at it. Now, AUD is still weak. GBP is also weak. But look at here. Let's look at the change. Traders who left AUD last week are back in the market. AUD has increased. The sellers have increased by 10,367, which is 12%. So more sellers have come on AUD. And then this week, GBP to more sellers have come on GBP. So it means GBP and AUD are both weak. More sellers. So it means GBP AUD, if it's me, I won't trade these two against each other. I'll look for a better one. And that will be CAD. So it means AUD is weak. W, more weak this week. GBP is also more weak this week. Which currency is less weaker? Let's look at Euro. Euro, the trend is what? Buy, isn't it? Let's look at Euro. Here's Euro. More buyers have come into the market for Euro. 21,067 more buyers have come on Euro. So Euro is going more stronger. So which is an S. So we have weak, weak, S, strong. So you know we are trading strong versus weak. So it's going to be Euro AUD. You should be looking at what? Buy, because Euro is strong and then AUD is weak. So Euro AUD, you are looking for what? Buy. Euro GBP, which is weak, weak. Euro GBP, you are looking for what? Buy. Oh my God, it's okay. I need to leave the rest here. Now, I'm sure things are interesting here, right? These are getting interesting. So the rest, everything is there. If you like, you can do the whole thing yourself. And do the whole thing yourself. And like I told you, USD is beginning to reverse in terms of its strength. So those of you holding on to some dollars, you need to be cautious because we are going to see a reversal. I don't know if it's going to be a long-term because USD has hit its peak. So it's going to begin to drop a bit slowly, 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 slowly. What is today's date? Market down. This is the prediction you will never get anywhere, but on leading Forex, on USD. In Ghana, for instance, USD is so high as compared to our Ghana cedi here. But I must be honest to tell you that USD is going to gradually begin to fall because it has hit its peak. So those of you holding bullish on USD, you should be cautious because there's going to be bits and pieces of reversals, until this reversal drops a bit. We'll see the drop a bit. Yes, because this one is at its peak. You can look at last week, 4% against 96. Now it has, the buyers are increasing, the short ones are reducing. So it means what I'm saying, the reversal I'm saying is true. So we are going to begin to see the reversal on all USD pairs. So Euro USD, for instance, is going to go buy. Get the catch. USD JPY is going to go sell. Get the catch. USD, come on, get a catch, get a catch. I won't be able to talk much because I want this video to be short. It's already a long video, but let me end it here. Now, like I said, if you want me to take a week to teach you this COT report, the way I do my calculations and whatsoever, it's just $50. It's not for free. But if you don't mind, you can also wait. Once I get the website ready, every week, I'll do the analysis over there. You can just go look at the report, the calculations, and then you will use that along with your strategy. So now you know I have given you two signals. Euro AUD is buy. So you'll be looking at your tool. If your tool gives you, or you'll be looking at your strategy. If your strategy gives you a buy signal on Euro AUD, then you know it's time to go in for a buy. Okay. Again, Euro GBP is also a buy. So you'll be looking at your tool that you have, your trading tool that you have. Once you get a buy on Euro GBP, you are good to go. And some other currencies, just as I've said. So you can also use the COT report along with your strategy, which you already have. Okay. But remember that you are trading the bank's way, the COT way, COT way, because you are using the COT report and you want to follow the banks or the institutions who are the market makers. So you want to follow them. So when they are going and they are making the profits, you will also be making it small, in bit by bit, weekly, daily, small, and be going and also be increasing and following them. Is that okay? So that is that. My name is Kofi, your admin. If you don't subscribe to this channel, I don't know which channel you will ever subscribe to. Please subscribe and wait for more information. More information is coming. But like I said, the website will be done soon, and I'll begin to show my report over there for you to come. Maybe you don't want to go through all these calculations. Maybe it might be confusing. I'll do that for you. The only unfortunate thing is the day I'm not able to put it there, then what happens? So once you learn how to do it yourself, I'm sure you are good to go. Thank you. I'll see you in the course of the week. Don't forget, tomorrow, Sunday, we'll come away with the signals. I've even given you a lot of signals here already. All right.